Hello everybody, this is Swati Gupta, Chartered Accountant. Welcome to lecture number 7. In this particular lecture, we will study Ind AS 34, that is Interim Financial Reporting. We will cover the concepts, the basic provisions of Ind AS right now. And in the next lecture, we will cover the ICAI question answers, examples and illustrations thoroughly. If you are new to the channel, don't forget to like, share and subscribe. And for full Ind AS course in Hindi and English, don't forget to check out the description box. Now, if you have any sort of query or suggestions for me, then comment down below or DM on my Insta or download the app and chat with me. Let's begin with this lecture. Firstly, we'll talk about the objective of the standard, why this particular Ind AS 34 has been brought into action. Now, as you know, while studying the Ind AS 1, we have covered a specific point which highlighted that Ind AS 1 is not applicable on interim financial reporting. Why so? Because separate standard provides the provisions for interim financial reporting. Okay. Now, in this particular lecture, the standard does not ask any particular entity, does not requires any particular entity to apply interim financial reporting, to present their interim financial reporting. Okay. It never ever asks or requires any particular entity. But if any particular entity chooses to apply interim financial reporting, then they have to follow the minimum requires laid down in Ind AS 34. Okay, so the objective of this particular Ind AS 34 is to prescribe the minimum content that one has to present while preparing their interim financial reporting, and secondly, the principles for recognition and measurement, because the annual statements has its own measurement and recognition principles. For interim financials, how do you need to reclassify them, classify them, record them, present them and measure them? These all criteria, these all guidelines are prescribed in Ind AS 34. Okay. So now, what is interim financial statement? Simply any statement that you provide within a financial year, in between of the financial year, before the end of the financial year. These are known as interim financial reporting. It can be either monthly, quarterly, 6 months, any duration as the entity particularly chooses. Okay. Now, it never ever mandates, please read this. Ind AS 34 does not mandate, it does not require or makes it compulsory which entities should be required to publish interim financial reporting. However, how frequently it should make it? Okay, it does not require any particular entity. How should they prepare it? When should they prepare it? Okay, what should be the frequency of reporting it? It never ever prescribes. But if any entity chooses, it shows how one should present their financial statement information. Okay, how soon after the end of an interim period. Next, permitting less information. Now, Ind AS 34 permits that you can comparatively, as compared to annual statement, you can present lesser information. You are permitted, you are allowed to present lesser information if you choose to present interim financial statements. Okay. Next, each financial report, annual or interim, is evaluated in its own conformity to Ind AS, that particular Ind AS will be applied or not. A particular financial statement is compliant of Ind AS or not is checked in their particular standalone basis. Okay. Now, if for example the quarter statement has been presented and it does not comply to Ind AS, then it will not be considered that the annual statements does not comply to Ind AS. They will be checked on their own. Okay. Each and every financial statement, either interim or either annual, are checked, are evaluated on their own. Okay. See, read. Even if entity's annual financial statement will be considered Ind AS compliant, even if entity may not have provided interim financial statements during any particular period, financial year, or may have provided interim financial reports that do not comply with this standard. Okay. If they have provided any interim reports which are not compliant to Ind AS, this will not make the annual financial statements not compliant to Ind AS. Okay. These all are checked in their own standalone basis, in their own capacity. Okay, checked separately, you can say. Interim means that is within a year. Interim reports are actually, as per the definition, are shorter than the annual period. Okay. Let me know in case of doubt. How can you tell that? Via commenting down below or DM me on my Insta, or you can download the app to chat with me. Okay. Now the form and content. If entity publishes a complete set of financial statements, if while presenting the interim financial reporting, it chooses to present complete set of financial statement, its form and the content should be in line with Ind AS 1. Now, whenever it is providing a complete set, what does complete set means? It means including balance sheet, P&L, cash flow statement, change in equity statement, and notes to account. Okay, these five compiles and becomes a complete set of financial statement. Now, if one is choosing to present complete set of financial statements while preparing the interim financial reporting, then they have to follow Ind AS 1. Okay, if they are providing any partial, then see what happens. Condensed financial statements means a shorter version, or you can say lesser information. You can say lesser info. This means condensed. Condensed means lessened. Okay, lesser information is also permitted. So if entity publishes condensed financial statement, then what happens? Statement shall include headings, subtotals included in most recent annual statement. Okay, now it cannot skip the heading part. Whenever you are condensing your financial statements, whenever you are permitted to show lesser information, these lesser information should consist of all the headings that were given, that were mentioned in the annual statements. You cannot skip the heading part. You cannot skip the heading and subtotals. See, you cannot skip the headings and subtotal part while presenting the condensed financial statements, that is lesser information. Okay. Secondly, additional line item if their omission would make their condensed interim financial statement misleading. If you are permitted to show lesser information, and if such lesser information is misleading, then you need to provide additional items. You need to provide additional line items in case if the lesser information is anyhow misleading, okay, is creating confusions, is not presenting the true financial position. If this is the case, then you may need to provide additional line items in what? In those interim financial statements. Okay. Third, next, the basic always show the present basic and diluted EPS for that period. Okay, you have to show the basic and diluted EPS. Okay, you know what is basic and diluted EPS. This will also be considered while you are reading the Ind AS of earning per share. Okay, now here only you need to know that while preparing interim financial statements, you are allowed to show lesser information. But in case of lesser information also, what you need to keep in mind, you cannot skip the heading and subtotals. Secondly, additional items has to be mentioned even in case if the lesser information is misleading. And thirdly, you always have to show the basic and the diluted EPS portion. Okay, neither requires nor prohibits inclusion of parents' separate statement in the entity's interim financial report. Neither the standard requires that you have to include and consolidate the parents' financial statements, neither nor the Ind AS 34 asks you that you cannot include the parent entity's financial statements. Okay, neither it compensates, neither it requires you, nor it prohibits, nor it asks you that you cannot do this. Okay. Next, significant event and transactions. Include in interim financial report an explanation of the events and transactions that are significant. If these are significant, any significant transaction. What does significance over here mean? Significance means which has impact on the financial statements, which will have impact on the user of the financial statement. These are known as significant. Can make any change. An explanation of events and transactions that are significant need to be reported, included in the interim financial statements, though lesser information can be shown. Secondly, shall update the relevant information presented in the most recent annual financial statement. Now, in annual financial report, you have shown some particular amount or some particular transaction. You need to give an update about that if they are significant. Okay, if you are presenting any quarterly statement, so anything that was presented in the annual financial statement, previous annual financial statement, you need to update about that. You need to update, and if there is any significant other information that is new, you have to provide a significant explanation of the same. Okay. Now do not include in interim financial report. Avoid relatively insignificant, any information that is insignificant, that you think that will not have any much impact on disclosure of the same. Then what you can do, you can skip that information. If users of the FS, that is financial statement, do not have access to the information incorporated by cross reference on the same terms and same time, the interim financial report is incomplete. See, what is cross reference? For example, over here, see, okay, this particular slide is there. Over here, for example, I ask you that please refer, for example number 2, page number 3.5, for example. Okay. Now, if you have access to the particular module of which I am asking you to refer, then it's fine. Then the particular information is valid for cross reference. But in case if you do not have access to that particular module, you do not have access to that particular page, you do not have access to that particular example, will this reference be valid? No. So therefore it is stating that if in case any information that is presented by cross reference and the particular user does not have access to that particular information which should be referred, then such information, such financial statements will be said to be incomplete. Okay, will be said to be incomplete if by cross reference the user is not able to access that particular information. Are you clear? Please, if you are clear, then let me know. Write down in the chat box clear. If not, then please ask your doubt. Don't keep your doubt as your doubt. It's strictly prohibited from my side. Let's continue. Note, other disclosures. The following disclosure shall be given either in the interim financial statements or incorporated by cross reference. Either what I should do, simple terms, simple. What I should do if I want to give you any sort of example, what I should do over here is either write the whole example over here, mention the whole example in the next slide. Either I should do this, or what I can do is I can put it by cross reference. But cross reference will be considered as complete only and only when the user has access to that particular material from which it should be cross referred. Are you clear? See, this is very simple point, okay, but very important point. So while preparing financial statements, you have to keep in mind. For example, if you are referring to any particular previous annual statements, if you know that particular user will be having access to annual financial statements, then what you can do, you can surely go for cross reference. If you know that these annual statements will not be available, might not be available, then what you need to do, you need to simply present all those facts and figures, all those information in the particular interim financial statement itself. I hope I am clear. I am pretty clear. Okay. Next, periods for which interim financial statements are required to be presented. See, what it should be present? It should present balance sheet. How come? End of every current interim period. End of every current interim period. Okay. For example, you are preparing for June quarter. Okay. Quarter 1. Then June 30. So you should present the balance sheet for June quarter period and a comparative balance sheet as of the end of the immediately preceding financial year. Okay. See, for example, if we talk about balance sheet, what you need to do, for example, you are presenting for quarter 2. Okay, it ends at 30th September. So you have to present 30th September balance sheet and a comparative balance sheet of 31st March 2002. What? The annual financial statement as well as the quarter statement. What you need to present. For example, if you are talking about quarter 3, then you have to provide figures of 31st December and comparative period of 31st March 2022. See, again read this. You have to present a current interim period, okay, the prevailing quarter for which you are providing interim financial statements, no doubt in this. And secondly, a comparative balance sheet of the end of immediately preceding year, that is last annual financial statement, that is last annual FS. Okay, the current reporting period as well as the last annual FS. Second, P&L. Here it is important because it applies you that current interim period, no doubt. Cumulatively for the current financial year to date. Cumulatively means for example, if you are presenting for the third quarter, then from 1st to 3rd quarter, from 1st April to the end of 3rd quarter, you have to present a P&L of that particular as well. For that particular quarter, quarter 3, and plus quarter 1, quarter 2, quarter 3. See, current interim period, that is quarter, for example 3, 3rd quarter, okay, 3rd quarter, and cumulatively for the current, cumulatively means by adding up, cumulatively for the current financial year to date, for the current financial year to date means quarter 1 plus 2 plus 3, quarter 3, okay. Next, with comparative, and what are the comparatives needed? Of PL for the comparable interim periods, that is current to date of the immediately preceding financial year. Okay, let's see the example. Now, for example, statement of P&L, if you talk about 6th month ending and 3rd month ending, then what you need to present? 30th September 2020, okay, the current period, and cumulatively up to 30th September, that means quarter 2, year quarter 1 plus quarter 2. Financial statement, here you will be showing 6 month figure, here you will be showing only the figures of last quarter, okay, of the quarter for which you are presenting the information. 3 month ending 30th September and 30th September 2001, okay. Are you clear? Are you clear? Of the previous year as well, of the previous year as well. This is of previous year, this is also quarter 1 plus quarter 2, okay. So this is of previous year. Are you clear? Next, cash flow. Statement of change in equity cumulatively for the current financial year to date, that means till the quarter. If it is quarter 1, then the cumulative and the current period will be same. But if we talk about quarter 2 or quarter 3, then cumulative figures will be quarter 1, 2, 3 till date, and the current figure will be only quarter 3rd or quarter 2nd, whatever. With a comparative statement for the comparable year to date period of immediately preceding financial year, you have to present the comparable year to date period, okay. See, statement of change. For example, if you talk about 6 month ending, then 30th September 2022 and 30th September 2021. This is all cumulative. Cumulative means quarter 1 plus quarter 2. Cumulative figure. Wherever it is written cumulative means year to date, from the beginning of the year till the time it is being reported, the current financial period. Okay, reporting period. Now next, cash flow. Current financial year to date. Current financial year to date means from the start of the year till date, if it is quarter 2, 3, 4, whatever, with a comparative statement for the comparable year to date period of the immediately preceding year, and the same period for the previous financial year, from the previous financial year, the same period, so that it can be compared well, that in the last 6 months was this 1 crore rupees, and for the previous year, in the particular last 6 months, what happened. For example, if we talk about a cricket match, what happens till date, we see that for example, the current batting team, a second batting is going on, so you always compare, there is always a comparison shown that in first 10 overs India has made only for example 100 runs and 2 wickets, for example, but the other team, okay, when they were playing in the first 10 overs, they have made, for example, 110 runs. Okay, so it can be covered that for the first 10 overs, India has made 100 runs, whereas the other country team has made 110 runs. Okay, are you clear? So this is what, this can be made a comparison. So the period should be same. This is also of 10 overs, this is also of 10 overs. Here, therefore, it is given that, see, cumulative for the current financial year, for example, if we talk about third quarter, then you have to present financial statements for 9 months. Okay, 3 quarters means 9 months. In particular previous annual year, you have to cover the 9 months of that also. Okay, so for example, if we talk about financial year 2000 to 21, okay, 21. Then you have to show, for example, for third quarter. For third quarter, what you need to show? From April 1 to 31st December, okay, of current year. And of previous year, what you need to show? April 1 to 31st December. Are you clear? If you talk about third quarter, what you need to show? You need to show the cumulative figures. From what? From the current year as well, from previous year as well. Okay, so these will be compared hand in hand. Now, this is an example given. You can see that 30th September and 30th September 2001. Next, some important points to be remembered. Unusual items, changes in accounting policies or estimates and errors are recognized and disclosed on the basis of materiality. On the materiality, if such particular information disclosure will have any influence in the economic decision of the user or not. If yes, then these are material and they need to be disclosed. If not material, if immaterial, then these need not to be shown. In the relation to interim period data, to avoid misleading inferences, so that if you are not disclosing any material information, this might mislead the present position of the entity. Okay, the user might get a wrong interpretation of the current position of the entity. For example, there is a court case going on and you have lost, the entity has lost in the second quarter, and there is a heavy payment penalty of rupees, for example, 2 crores. If the user is not knowing about this particular material information, will its financial decision, economic decision impact? Yes, it might be impacted. He might overbuy or less buy or whatever the decision it has to take. Okay, so it should not, if disclosure or non-disclosure of any information has impact, can influence any user's information, then it is known to be material. Okay, it should not be misleading inferences that might result from non-disclosure. If an estimate of an amount reported in an interim report period is changed significantly, if it is changed significantly, okay, estimate has changed significantly. For example, you have taken an estimate of something, okay, employee will be paid this much, okay, this bonus will be amounted. Any estimate has been changed during the financial interim period of the financial year, but a separate financial report is not published, and a separate financial report is not published for the final interim period, the nature and amount of the change in the estimate shall be disclosed. You have to present and disclose the nature and amount of the particular transaction. You have to mention the nature and amount as a disclosure. Okay. Next, Ind AS 8 requires disclosure of the nature and, if applicable, the amount of the change in estimates that either has a material effect in the current period or is expected to have a material effect in the subsequent year. You have to disclose it. You have to disclose it only and only when it has material impact, either in the current year or in the subsequent periods that will come ahead. Lastly, an entity is not required to include additional interim period financial information in its annual financial statement. It is not required to add on the interim financial statements any additional information. Okay, but what happens? But they have to present and disclose any material information that might have impact on current period or the subsequent period. Let's see next. Restatement of previous reported interim periods. Restatement of previously reported interim periods. This means what? A change in accounting policy other than one for which the transition is specified by a new Ind AS shall be reflected. If there has been any change in accounting policy, a new standard has been brought in and applied, and it has a particular entity has to apply such Ind AS, then it can be retrospectively or prospectively. If retrospective effect is required, see, if retrospectively means from the previous period, okay, before the current date, whereas prospective means from the current date onwards. From the current date onwards. For example, you have to make any change. Retrospectively means from the previous current, from the period before the current date. Then restate. Then you need to restate the financial statements of prior interim periods of the current financial year. and the comparable interim periods of any prior financial years that will be restated in the annual financial statements. Now, when it will be impracticable? When it is impracticable to apply the new accounting policy prospectively from the earliest date practicable, then it has to apply new accounting policy prospectively from the earliest date. Any particular change in accounting policy or any new standard applied, it has to be applied retrospectively, then you need to restate. In case if you are, after putting up all the reasonable efforts, after genuinely trying all the reasonable efforts, what you need to do, if you are unable to apply such particular transaction treatment retrospectively, that is before the current date, then what you need to do, you need to apply it from prospectively, that means from the current date onwards. Okay, retrospective required, restate information. If impracticable, if you are not able to do that, then apply it prospectively. Last, interim financial reporting and impairment. Impairment loss you will study in separate standard, but if any impairment loss is assessed, for example, it means if carrying amount. What is carrying amount? The amount at which a particular asset or liability is recorded in the financial statement. That particular amount is known as carrying amount. If such carrying amount is greater than the receivable amount, the amount that you will receive, okay, for example, if you sell this, you will receive 10,000 rupees, and if the carrying amount is 30,000 rupees, okay, such amount decline from what you will receive from market, okay, this situation is known as impairment. The particular asset is impaired, okay, the amount of difference of rupees 20,000 is then transferred to P&L. Okay, so in case of any impairment loss is assessed at the end of each reporting period, if entity requires to recognize impairment loss, record as per Ind AS 36 as per their particular standard. At the end of subsequent reporting period, if impairment loss have been reduced or avoided, if such 20,000 decrease has been removed, if you are reassessing on the next subsequent period, for example on quarter 2, you assess that there is a downfall, you will record as per Ind AS 36. But on the next, for example in the quarter 3 subsequent period, you assess that the 20,000 decline was temporary and now it has been increased, it will be avoided, such decrease will not happen. Then what you need to do, if impairment loss has been reduced or avoided, an entity shall not reverse an impairment loss recognized in previous interim period in respect of goodwill. They will reverse it, but not in respect of goodwill. Okay, I hope you understood this. This is end of the Ind AS 34. Okay, in case of any doubt, please ask me. Don't keep your doubt as doubts. Okay, I strictly don't like it. Now please, in case of any query, feedback, suggestion, don't forget to reach out to me. I am really excited and always available to help you out. See you in the next lectures. Take care, be safe, stay tuned.